Ahora presentamos a Jay Subramanian, Strategy and Profit Improvement Leader para EY Américas, quien encabeza la conferencia Reducción inteligente de costos para lograr mayor competitividad.
Hi, everyone. This is Jay Subramanian. Today, we're going to be talking about our EY perspectives on cost transformation in banking. So today, what we see in the industry is all of your peers are really trying to achieve step change in competitiveness, profits, and operating leverage and customer experience. You know, we've all been doing this for many, many years, but today it is very different, primarily because of the impact of COVID-19 and lower interest rates and protectionist environment and so forth. Most of your competitors are really looking at how can they really fundamentally change their business model and operating model to improve their profits in a sustainable way. So really, if you look at the left side of this page, what they're focused on are reevaluating the business model, say, what are the businesses that I should keep? What are the businesses that I should exist? What are the businesses that I should actually fix or keep, improve? Now, all the while, the key goal really is it's no longer a cost reduction objective. The question really is around how do I increase or at least keep the market differentiation that I have in today to improve my customer, my products, and the markets that I serve. And at the same time, how do I horizontal improvement across the various functions to improve my profitability? Good things that we see your peers really focused on. The first one really is around how do I improve data and insights on my customers to improve hyper personalization so I can deliver great service to one is really around reevaluating all of our products and services that we have in the market to determine what of those are really profitable and what of those are not profitable that I should actually rationalize. And as I mentioned, a key focus really is the third one around how do I improve personalization to offer a portfolio of services that my customers want from me today in the market with a great, delightful experience to them. The fourth, from a cost productivity improvement point of view, is how do I demand manage my services, the processes, et cetera, using automation, process reengineering, and so forth to improve the productivity of the services that I have to offer in the market. The fifth really is a constraint more so than not for many of our clients, which is antiquated technology that's preventing people from quickly delivering products and services in the market. So how do I really improve my core platforms and transform the way I can deliver new products and services to the market? The sixth is around how can I really improve my talent and workforce across my enterprise. And now this in itself is a unique challenge, especially because of the remote environment caused by COVID. But the question that many of our clients are really looking at is what are my core competencies that I should do myself when I need to upgrade my talent versus those that I can achieve via ecosystem partnership with third-party service providers and so forth, especially in areas which are not differentiating. Manage my risk from going from prospective controls rather than retrospective controls or after the fact controls in itself. All of these 7 areas today is a very, very important opportunity for all of our clients because if you look back in time, we've built our business and our operating model really taking into account constraints around how this location stickiness, where our customers are, specific technologies, and so forth. But today, COVID has proven that many of those operational constructs are no longer applicable. As an example, needed to be very close to our customers or in the same locations and so forth. With video technology like what we're using today, our clients are really looking at that fundamental operating model and finding ways to change the operating model, which is resulting not just in substantial increase in productivity, but very, very so these are the major themes that we see. And as we come along, I'll kind of provide you with some examples across each of the domains themselves. basic 5 major questions that they ask, of which the first 3 are really kind of probably the more important ones, which is how do I really they have to achieve? What that's done really is drive each of those functions to focus on how they can optimize within their specific functions, but not really front to back. So how do you really change the mindset within a bank to look at things front to back? That's a very critical question that most of your peers are grappling with. The third area is around a lot of data. A tremendous amount of data is being collected across the banks and in fragmented areas across the enterprise. How can we really take all this data and generate insights around customers, their behavior, their transaction histories, and so forth, so we can provide them services that are specific to their needs at this point in time. The fourth point here is probably a very critical point as well, which is most of our clients we see invested very, very heavily in front to back transformations and digitizations. The question that they ask us is, how do we've done all this transformation, but we see that the analog processes that we have are still remaining. So effectively our cost for service has actually increased because we haven't been able to turn off the analog processes. So how do we move from the dual mode of execution to a completely digital model? And I'll share with you some examples later on and some of the kinds of challenges that they face. Lastly, a very critical piece is around employees. Our employees are absolutely tired of the many, many years of transformation. So how can I actually engage my employees to drive this next generation of transformations to really capture the opportunities that are available in the market space? And how do I make sure that I can gain line of sight to successful realization of those benefits that I'm planning to achieve from the transformation in itself? So what I thought we'd do was kind of share with you examples that we see through personal and small business banking, commercial banking, and wealth and asset management. Talk to you about what are the top priorities that we see your peers focused on front to back across the 3 kind of major domains in themselves. I think many of these will be fairly familiar to you, journeys. But starting on the top left around distribution, COVID-19 has caused a tremendous change in distribution. So major focus is really around how do I shift to digital channels and enable our customers, because they're not able to visit us in person, how do I kind of drive more self-service functionality of my businesses or the services that I provide? And as a result of that, how can I actually rationalize my branch network, which is incurring significant fixed costs, and actually drive those costs down? The third area is an interesting one, a major trend that we see in the consumer industry, which is how can I partner with out-of-band industry or domain segments, like, for example, property and casualty insurance, such that I can provide what my customers want today, which is really what we here call wholesome wellness. I want to be able to go and bank with a bank that can offer me a portfolio of services, not just banking services, but potentially insurance services and healthcare financing and so forth. So that's a major area of strategic focus, the third point here, for many of your competitors, which is leading to new partnerships that I'm sure all of you are seeing in the news as well. Lastly, on the distribution side, how can I actually transform the role of a branch from the staff in a branch from tellers to being more focused on delivering universal banking services and advice to our customers? I think today, if you look at many of the banks, you see advertisements and kind of communication around the more relationships that are that people are trying to develop within their branch networks. Similar way, in the commercial banking side of it, historically, the relationship manager role has been kind of almost location bound. So the question driven by COVID is around, how can I change my coverage model because I'm not having to travel as much? How can I increase the number of clients per relationship manager? And how can I scale my relationship managers to focus more on digital technologies such they're working on more productive areas rather than travel, rather than paper, and so forth. In a similar way, in the wealth and asset management space, there's a significant increase in self-directed models like robo-advisors and so forth. And there's also a fundamental question, given the amount of digital presence or access that customers are seeking, on what are the changes that I can make to my distribution model? What percentage of my model should be captive versus dedicated, and so forth? And what should the compensation structures be for those specific individuals? Moving on to the product, excuse me, the product side of the world, as I mentioned on the top of this session, there's an extreme focus in the consumer side of the world around rationalizing the products and services. There's one of our clients, as an example, studied the true profitability of their products, and they found that only 31% of their products were actually really profitable. So the question really is around, how do I make those products profitable or retire those products in this environment, or the way I see the environment change over the future? The second area, because of the fragmentation in products, is around how can I actually achieve horizontal commonality across the various services that I provide? And things like, for example, even simple things like chatbots and statementing and so forth, features that I'm providing to my customers, how can I make them somewhat common so that I can share the costs to deliver those services? In the commercial banking space, there's an extensive focus on categorizing clients into segments or tiers, such that you can effectively provide the right kind of services and via the right kind of partnerships to them as well. And as I mentioned on top around wholesome wellness and so forth, in the wealth management side of the world, there's a greater focus on providing comprehensive financial planning to customers rather than just pure the wealth advisory services alone, and also adding peripheral services like cash management accounts and et cetera as well. Switching into operations functions, I think this is something that all of you will be very familiar with. There's a major focus on modernizing core banking platforms such that you can deliver new products and services to your customers, again, with the right kind of personalization, enabling more greater data access through open banking APIs, et cetera, to reduce the amount of manual data entry, validation, et cetera, to reduce costs. As I mentioned, greater focus on generating 360-degree views of customers and interaction histories to be able to offer, very, very personalized experiences to our customers. The last point here really is other major focus on really looking at yourself carefully to say, what are the core services that are making me different in the market, and what are the ones that I should really consider performing through managed services outside outsourced service providers or third-party service providers, like, for example, collections, billing, and so forth. Moving on to the risk side of the world, over the years, there's been a major focus on implementing controls across the three lines of defense. So I don't know if there's any bank that I know of that doesn't have a major focus on rationalizing and deduplicating controls across the three lines of defense. This is a major cost reduction effort, as well as ultimately an improvement in controls as well. How can we bring in predictive risk analytics and risk management capabilities using data to manage risk predictively rather than after the fact as it happens? Ultimately, the goal really is to simplify, streamline, and standardize the risk processes front to back, and align them more towards the businesses and the products that you actually service as well. Within the risk functions in itself, as you can imagine, there are a number of functions, whether it be internal audit, compliance, etc., that are also available as alternative models to move to either develop captive COEs or centers of excellences, or even potentially outsourcing or making those managed services to third-party service providers as well. Moving on to technology. As you can imagine, with the focus on digital being a capability to provide great experience as well as reduce costs and straight through processing, etc., there's a heavy focus on technology. Now, with the budgets for technology being more or less flat over the coming years as it's forecast, there is a great focus on this concept of minimum viable operating model. It really is around how do you kind of determine what is the demand pipeline of demand that we have coming into IT and managing the supply of resources and capabilities against it. This is a very major focus for all of your peers, because IT almost always has an infinite pipeline of demand. How can you balance that infinite pipeline against the fixed capacity that you have available to deliver against those projects and portfolio of projects? What should I prioritize? What should I invest? What are the time horizons and the economic paybacks that I should be expecting from both the people as well as on the non-comp or the infrastructure side of the world? As I mentioned a few times so far, one of the great inhibitors to all of this has been kind of legacy debt and the need to modernize core platforms, things like mainframes and so forth. So as part of that modernization effort, there's extensive focus on rationalizing applications to reduce your app dev as well as your application maintenance costs, and migrating to the cloud to reduce the infrastructure costs as well. Now, clearly, um, getting the benefits out of application rationalization and modernization of applications by migrating to cloud, the biggest of the benefit really comes from from the people side of it on application development. So how do we kind of systematically enable DevOps and CI/CD at scale across the enterprise to get that 30 or 35% of the value from those modernization efforts, because infrastructure alone is not typically going to give you the payback in a desirable time frame. Lastly, in the technology space, focus on how do I embed agile into my ways of working front to back. There are notions that productivity and agility can be improved by 20 to 30%. Now, obviously, that is possible in specific addressable spaces, provided the enterprise is truly adopting agile at scale, which obviously comes with its own learning curve and risks and so forth as well. Broadly, a set of themes that your peers are looking at in other enterprise functions is really how do I get changing the role of finance, as an example, from a group that is retrospectively providing information on what happened in the past months or years to one that's focused on providing more almost real-time financial and operational insights to be able to make better decisions. And the key piece here really is around how the role is evolving to kind of couple financial and operational metrics such that you can control both the demand, the supply, and the costs associated with those specific activities or functions as well. The second piece is around how do you really get the right cost structures and elasticity around non-core functions. Things, can I actually take my fixed costs associated with non-core functions and shift them into a variable model by looking at outsourcing certain functions? As an example, many of your peers are even outsourcing functions like, for example, tax and compliance, legal, testing, etc. as well. So there are a number of newer opportunities that are available to take a substantial portion of your expense base, and which is fixed today, and make it variable, outcome based, so you can deal with the volatility in the market. The third point here is another critical piece, which is with your existing workforce, right, both internal as well as external, how can you, are there capabilities that are available to measure the productivity of those workforce to understand what is the right supply and demand characteristic that is required, again, with a focus on fixed and variable expense, and also to systematically identify ways in which you can help them release that productivity. How do you identify friction causing activities and wasted work and create that as productivity to support growth rather than hiring? Um, Eliminating duplicative functions is kind of one of the more traditional levers, but there's significantly increased focus around looking at shadow functions and trying to find out where are the areas where there are duplicative functions like reconciliate that are causing reconciliations and so forth, and eliminating them systematically across the organization. Lastly, very critical point, given COVID-19 and the lessons learned from COVID-19, how can you really reevaluate your overall operating model and specifically your workforce and location strategy to really optimize the fixed costs associated with real estate and other expenses like IT, HR, and so forth to take costs down? So in summary, right, there are a plethora of excuse me, opportunities that have been created as a result or actually more easily attainable as a result of COVID-19. And a lot of your peers are really focused around from among these levers and a few others, how can I actually tap into these and make sure that I can transform rapidly such that I can capture a greater amount of market share and more importantly, improve my operating leverage so I can deliver predictable and sustainable margins over time. I'll stop here and see if you all have any questions or want to discuss any of these topics further. There are major initiatives that are in place. What do you see as the initiative that is most in demand by companies over the last year? I think one of the major focuses really that we see in our peers is as the pandemic and the vaccines have come out, how do I really get the right workforce back into my work offices that I used to work at? Now, it's not just around the safety of the employees coming back into the workforce, but as I mentioned, excuse me, but as I mentioned, a major focus has been around re-evaluating the operating model to say, how many of these employees should really be back in the office? How many of them can really work in a hybrid mode? How many of them can actually work from home? I'll give you an example. One of my clients, call it a Fortune 50 company, has decided over the next 5 years that only 17% of their employees will be back in the office permanently on a full-time basis. Around 70% of them will be working on a hybrid model or 2 to 3 days a week from inside the office, and the remainder will be permanently from home. As a result of doing this, on a per headcount basis, they actually are going to achieve around $26,000 in fixed cost reduction. So the combination of this effort really is not just reducing costs, but they're also changing the way they cover their employees, increasing the productivity to cover a larger number of employees and so forth. So it's a mix. This initiative has been a major focus at every client of ours, but really it's around how do I take costs out as a result of what I've learned from COVID-19, how do I take the fixed costs out of real estate? What portions of it can I make variable, etc. It's a great question. And it's a major area of focus. Now, obviously, achieving this requires some significant considerations in terms of resilience, resiliency, technology, and so forth. So it's not a simple problem. It's a bit of a complicated strategy, but many of your firm peers have actually developed strategies and are executing this. So as the market opens, there will be a greater focus towards moving towards these plans and achieving the benefits from this initiative. Any other questions? Here's another question that just came through. The question really is around, how is it if there's digitization front to back, how can we turn off analog processes? It's a very interesting question that one of you has asked. The question really is what we see at many of your peers is they've built processes for straight through digital processing. However, what we see in some of these cases is on the front end, there are custom products that are transacted in the market. As an example, one of our recent clients in the commercial banking space had great capabilities for small and middle market commercial clients to do straight through processing. However, their salespeople were adding custom covenants and riders on their contracts on the front end. What it meant was while they had digital processes front to back, effectively because of those custom riders and covenants, many of those activities, in fact, in their case, around 80% of the agreements that they were processing were still required manual touching, effectively defeating the purposes of digital as well. So when we talk about digital, it really is like that requires the focus of transformation front to back across the organization. It's a great question. Any other questions? Okay, if there aren't any other questions, I'd like to invite you to the stands. Right, thank you all very much. It was a pleasure chatting with you.